Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Tech, the company behind the AIRE ecosystem.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis.
Okay, so Tech, they're trying to do something pretty audacious here. We're talking about building a complete end-to-end real estate service stack.
Completely, and all powered by AI. It's not just about one piece of the puzzle like brokerage. They're trying to integrate brokerage, mortgage, title services, everything.
A whole transaction.
The whole transaction from start to finish. The goal is pretty clear. Monetize every single step a home buyer takes.
And we're starting to see some pretty explosive signs that it might be working. Let's talk about the growth numbers.
Right, the numbers. So for Q3, revenue was about $1.45 million.
Which, okay, I know it sounds like a small base.
It is a small base, you have to acknowledge that. But the growth rate is what's staggering. It's a year-over-year jump of around 326%.
326%. You just don't see that kind of acceleration unless something fundamental is clicking into place.
Exactly. And that brings us to the why. Why is it growing so fast? And it really comes down to the AI validation. Specifically, this AI-powered engagement assistant they've rolled out.
And this is in their mortgage operations, right? Right at the front of the funnel.
That's the key. They're using it to engage with leads, which is, the hardest part. And the metrics they've released are, well, they're kind of nuts.
Okay, lay them on us. What are we seeing?
We're seeing a 90% plus increase in borrower lead engagement compared to just doing it manually.
90%. That alone is huge.
But that's not even the big one. The one that really stands out to me is the increase in appointment conversions.
Okay, how much are we talking about?
A 200% increase.
200%.
200. So you're basically tripling your conversion rate from a lead to a meaningful appointment. That's not just an improvement, it's a total game changer for your unit economics.
It has to be. And that flows downstream. Right, more appointments means more?
More completed loan applications. And they saw a 140% increase there. It's just a massive leading indicator for where the revenue is headed.
So they have this powerful AI engine. The next logical question is, how do they scale it? How do they build a real competitive advantage around it?
And that's where the vertical integration strategy comes in. Their whole pitch to the consumer is that this is a simpler, smarter, and more affordable way to buy a home.
The affordability part is interesting. How do they do that?
They offer commission rebates if you bundle the services. So if you use their brokerage, their mortgage, and their title service all together,
you save money.
You save money. It's a powerful incentive to keep customers inside their ecosystem, which in turn feeds their AI more and more data.
Creating a flywheel effect. A data moat.
Precisely.
Yeah.
But to make that work, they need a national footprint. They can't just build that out organically. It would take forever.
Which brings us to the acquisitions. The Preview deal. Specifically.
Yes, the Preview acquisition was like a bolt of lightning for them. It instantly gave them a licensed brokerage footprint in 11 new U.S. markets.
So the funnel for potential customers just got way, way wider practically overnight.
Dramatically wider. And just as important, they brought in the expertise. They appointed Preview's co-founder, Thomas Kutzman, to actually lead their brokerage growth.
Smart. So you're not just buying assets, you're buying the know-how to run them effectively and integrate the tech.
You have to. That integration piece is everything. Getting their proprietary AI, like that engagement assistant and their loan officer assistant, deeply embedded into the workflow is what creates the long-term sticky advantage.
Okay, let's pivot a little. We've talked about the explosive growth, but that kind of expansion usually costs money. What do the financials look like?
Right. And we need to be clear here. The company is currently loss-making. That's just a fact. The upcoming results are expected to show a loss of about 4 cents per share.
Which is pretty standard for a company in this phase, right? This is a high-growth, acquisition-heavy playbook.
It's totally normal. You have to see it for what it is. This is a blue-sky growth story. Cash flow is negative because they are pouring every dollar back into scaling the platform.
So they're reinvesting in things like the Preview deal and the AI infrastructure itself.
Exactly. They are building for the future. The bullish case isn't about near-term profitability. It's about the path to long-term efficiency. It's about operating leverage.
So how does that leverage actually work? Walk me through how those AI metrics lead to better margins down the road.
It's all about automation. Think about how much time a traditional loan officer spends just, chasing down leads that go nowhere. It's Incredibly inefficient.
Right.
Now you introduce an AI that boosts your conversions by 200%. All of a sudden, your revenue per marketing dollar and your revenue per loan officer just skyrockets.
Because each employee becomes dramatically more productive.
Massively more productive. So even while their overall spending is high during this build-out phase, the underlying efficiency of the business is getting better and better. That's the path to profitability.
And it seems like the market is starting to pick up on this narrative.
Yeah.
What's the general sentiment out there?
I'd call it net bullish. The coverage we're seeing talks about them quietly building a national powerhouse. People are starting to see them as a real AI real estate platform, not just another brokerage.
And the technicals seem to be reflecting that. I saw a recent price target increase that was pretty substantial.
It was a jump of about 40%, up to $1.25. When you see analysts make a move that big, it means they're re-rating the entire growth story based on the execution.
Based on things like the preview deal and those AI metric announcements.
Yes, they're seeing the proof points and adjusting their models accordingly.
So for anyone listening, what should they be watching for over the next, say, 3 to 6 months? What are the key catalysts?
The next earnings report is, it's going to be crucial. And you need to look past the small EPS loss that everyone is expecting.
What's the real story then?
It's the sequential revenue growth. They posted that 1.45 million in Q3. They need to show that the acceleration is continuing on top of that base.
And what about the AI metrics?
Just as important, we need an update. Was that 200% conversion boost a one-time thing? Or is it a sustainable part of the model now? Consistency is key.
And I'd also be looking for updates on the integration itself. Are they actually cross-selling mortgage and title services into those 11 new preview markets?
That's the whole point of the vertical integration strategy. If they aren't, the synergies are lost. And of course, you have the macro picture.
Interest rates.
Yep. Any sign of interest rates stabilizing or especially cutting would be a huge tailwind for the entire housing market, which would directly benefit their business.
Okay, we have to be balanced here. We've laid out the bull case. What is the bear case? What are the biggest risks?
The number one risk, and it is a big one, is just pure execution complexity. They are juggling so many things at once.
Integrating preview, scaling in new markets, rolling out new tech.
It's a lot. And when you're spinning that many plates, it's very easy for one to drop. A misstep or a delay could really hurt their momentum and their ability to realize those synergies they've promised.
And what about the financial risk? The fact that they are loss-making.
That's the other side of the coin. Because they're burning cash to grow, they're dependent on a healthy market. If we enter a real risk-off environment for a long time, raising more capital could get a lot more expensive.
Right.
That said, the market seems to be okay with these risks for now. The reaction to their latest 10Q filing was pretty neutral, which suggests investors see the triple-digit growth as a fair trade-off for the near-term losses.
So if you tie this all together, what's the big core question an investor has to answer here?
The core investment question here is whether the dramatic efficiency gains proved by AI on the front end, like that 200% conversion boost, can truly translate into a structurally higher margin business model than traditional real estate services. That's the billion-dollar bet the platform is trying to win.
We'll be tracking those unit economics closely. Thank you for tuning in to Smart Wealth with Joshua. Don't forget to subscribe and hit that like button so you don't miss our next analysis.